and welcome to ET Insight, where we get you a 360-degree view on the big picture of what's happening in business and economy. I'm Manisha Gupta and this is what we have for you on the show today. As investors around the world return to safe havens, all that glitters is quite literally gold. Prices have touched a lifetime high, but they could go up a lot more. Find out why. With the government cracking down on cash transactions, gold has emerged as the new currency for corruption in the country. And what are the different ways in which you can ride the gold boom? Here's our top story. Diamonds may be a woman's best friend, but gold is something that everyone trusts in. Whether it's your wife, investor, or big global hedge fund managers with billions of dollars to invest. Since the start of the global financial uncertainty with the collapse of Lehman Brothers, there has been no end to it. Many people have started placing their trust in the yellow metal. Indians alone have imported $16 billion worth of gold from April to June 2011. The result, gold prices are at an all-time high, and there are reasons to believe that it could be headed higher from here as well. Let's see why.
It's caused wars, inspired raiders, spurred continental discoveries, and pretty much driven human greed from time immemorial. It's gold that we're talking about, that yellow shiny thing that never fails to dazzle anyone. And now, with the global economy teetering uncertainly, the smartest investors are betting that gold will once again be the preferred store of value.
The economy is slowing down. We're going to have another recession in the U.S. in late 2011 or 2012 or 2013, and it's going to be worse than the last time around because America has shot all of its bullets printing money and spending money we don't have. Be very careful.
Since 2008, gold has been on a steep bull run, although it has been gaining for 11 years in a row now. That's the longest winning streak for the precious metal since 1920. And in the current year, it has outperformed all major equity, commodity and bond indices across developed and emerging markets.
I think currencies around the world generally will buy less and less over time, with very rare exceptions, and I'm afraid that the dollar's in that category too. And you know, it's very tough on people that count on fixed dollar investments, but I think it's baked into the system.
It's easy to see why gold is on a roll. It has everything to do with the state of the global economy. The US, the world's largest economy, is still struggling to turn around. To save many of its banks and mortgage lends and to stimulate demand, it has been printing more and more dollars. In the process, it has been weakening the dollar, which is considered the world's reserve currency.
If you look at the alternatives, it strikes me that treasuries, if you take into account the US debt problems, treasuries are probably overpriced at this point.
In Europe, there are many countries in the Eurozone that are going bankrupt and are being bailed out by stronger members of the Union.
Given that pension funds, for example, can invest in only AAA rated government bonds, and most of the European nations are losing that status, so they might lose out on a very large potential buyers of their bonds, which is pension funds. Therefore, in such a scenario, we believe that the safe haven status will continue to support gold.
In Asia, particularly in India and China, inflation is still a big worry. Rising inflation eats into the value of money, prompting households to park their savings in gold.
Many of the emerging market governments have moved quickly to raise interest rates to head off inflation, but there's no question in my mind that inflation will continue, and that's one of the reasons why we're bullish longer term on commodities, because inflation, of course, will push up commodity prices.
India alone imported $16 billion worth of gold between April and June this year, the highest gold import in a decade.
If you see the 1997 from OGL government started, okay, thereafter almost 10,000 tons of gold, 10 to 11,000 tons of gold import in India. It's a figure from the RBI source. And from 1997 to back, you go to the 400 years history, only 7,000 tons of gold. I don't think so. India have a huge quantity of gold. You cannot say anything about the maybe 20,000, maybe 25,000 tons.
India is the world's largest consumer of gold. The country's official stock of gold is worth an estimated $1 trillion, although the unofficial hoard of gold could be worth 3 times that. When India steps gold imports, prices jump. And Indians are clearly in a mood to buy more of the yellow stuff. But that's not the only reason why gold prices are expected to rise further.
I'm expecting gold prices to touch levels of around 24,000, or you can say that we can expect prices to touch levels of around 25,000 by Diwali or December. Overall, I'm pretty bullish in gold.
Current medium term, maybe 3 to 6 months perspective, I still believe gold has some more upside. Basically, banking on the current macroeconomic uncertainties. Number 2 is relatively higher liquidity. Still, we have a huge liquidity float out there.
Narne and Bagadia are hardly the only ones betting on gold's upward trajectory. The consensus among large investors and global analysts is that as long as the US doesn't start tightening its interest rates, gold prices will tend to go up. And the US Federal Reserve Chairman Ben Bernanke has said repeatedly that he is willing to keep interest rates near zero for an extended period to help with the economic recovery.
The Federal Reserve could also reduce the 25 basis point rate of interest it pays to banks on their reserves, thereby putting downward pressure on short-term rates more generally.
No doubt, most analyst reports on gold are talking of the precious metal touching new highs by the end of this year. A report from UBS is expecting gold to touch $1,750 an ounce within a month. Deutsche Bank expects it to go up to $2,000 an ounce over the next year. And Stanchart is betting on gold touching $5,000 an ounce by 2015. But not everyone is a big fan of gold. Warren Buffett, the world's best-known investor, thinks gold prices are in bubble territory. And another famous investor, George Soros, sold off his gold investments earlier this year.
Gold is too high, which is not to say it won't, go higher than this, but it needs to come down and then start up again. I think everything needs to cool down a little bit. Gold is too hot right now.
Undeniably, gold is an investment that pays no interest and its value depends on what another person is willing to pay for it. At the moment though, Buffett is in the minority.
We have exposure to both. Roughly 30% of the capital we manage on behalf of our clients is currently allocated to precious metals. Our larger positions are in gold because we think gold is more stable. It may not go up as much as silver will probably over the next 3 or 4 years, but in days like yesterday when everything else goes down by 5 or 7 or 8%, the price of gold only fell by 1%. So this is our hedge against the volatility we are seeing in the financial system.
Unlike paper currency, gold cannot be printed. It has to be mined. According to estimates, 2,500 tons of gold is mined every year, and in the recent years, demand has outstripped supply. Which means unless the world economy takes a dramatic U-turn, gold prices are likely to keep glittering for some time to come.
What will also keep gold glittering here on is the fact that gold is emerging as a new currency of corruption. That and more coming up in a short while. Stay with us.